as we talk Alibaba, the whole China-U.S. trade scenario, one of the things that we are paying close attention to is whether or not this Alibaba trade is indicative of what Chinese firms may be doing in the future, just listing in Hong Kong. Is it fair to say that this is a hedging type scenario for Alibaba?
Well, I think it is indicative of what other firms will do, though, to be fair, Alibaba has probably planned to do this for a very long time. This is where Alibaba wanted to list in the first place. They couldn't do that because the Hong Kong exchange wouldn't accept a dual class structure. They've since capitulated. Now they do. It makes sense for Alibaba to be on the Hong Kong exchange, where mainland China investors who use their platform can buy their stock. So they've got the best of both worlds. They had the highest IPO in New York Stock Exchange history, 25 billion. Now they're, 500 billion New York Stock Exchange. You can add another 13 billion to that in Hong Kong. And it does hedge against the trade deal or things going south. When you talk about what Senator Marco Rubio is doing with the Equitable Act and possibly delisting Chinese equities, this does hedge them, and other companies will do the same.
So let's talk about the Chinese equity picture right now.
Yeah.
There's a sense that perhaps everybody is getting caught up in U.S.-China trade.
Yeah.
Is this a scenario where investors can still feel confident about investing in Chinese companies, given the fact that we have the current climate that we do in U.S.-China trade?
I don't think we have a choice at this point. There's so much liquidity in the market, and there's so much money out there that's the only game in town is to invest. And we're being pushed to China more and more. I'm not comfortable with it. I don't do it simply because there really is no rule of law against stealing from American investors, and that's not been fixed. And it's not really being addressed in phase one of the trade deal. So I'm not happy about that.
Are you confident? I mean, phase one, we've heard rumblings of a possible phase two, maybe a phase three at some point down the line. Are you a person who believes that this is going to get resolved anytime soon?
I am not somebody that believes that there will be a phase two if there's a phase one. I would give President Trump all the credit in the world in the first place for doing something that the past two administrations largely didn't even attempt. To get any kind of pushback against China has been fantastic. But to now get into this kind of phase one that helps China largely as much as it does us. And I heard President Trump say he's holding it up because this has to be an unequal deal for us. I would like to see how unequal it is for us, because what I'm seeing come out of phase one doesn't seem as unequal for us as I had hoped. Currency manipulation, stopping them from manipulating their currency, that helps them. I mean, really, when we say that China is a currency manipulator, well, they are, in that they defend their currency. If they let their currency float, they'd be defending 8 or 9, not 7, which stops their consumer buying power, right? So their consumers have less buying power at 8 or 9 versus 7. So this helps them as much as it does us. And the other parts of this trade deal are not great. With our foreign investment being able to buy private companies in China and real estate when they're in a bubble territory, as Chinese banks are going bankrupt, like Boshong Bank, first in 25 years, and a second bank has gone bankrupt, and now they're saying, why don't your banks come in and buy some of our real estate? That's a bad deal for us and shouldn't be a part of phase one. More a part of phase one should be some of their judicial changes.